So my name is Brianne Rochelle. I am over at Escalon. We're really happy to have you all here today. We're very excited to be talking with Sydnie Keddington from Kickstart Fund. We do have some sponsors on the line, so I'm going to go ahead and just do a quick introduction to them, and then they're going to take just a few seconds to talk to you about what it is that they do and how they help founders. And then we do want this to be as interactive as possible. So if you guys have questions along the way or comments, please feel free to drop a line in the chat, and then we'll kind of field those questions as we go, or we'll hold some off until the end. We're going to go probably 45-50 minutes for the interview with Sydnie, and then the last 10-15 will be held for questions, depending on how many we have come through and how many we get through throughout the conversation. Would love to hear where everyone is at. This is virtual, so I know that we've got a lot of people from all over the country and a few global as well. So if you guys can drop a line in the chat and let us know where you are, we would love to hear from you. With that, I'd like to introduce Flavia Ryden with SVB. Flavia, would you mind unmuting yourself and saying a couple words?
Yeah, thanks, Bree. Hi, everyone. I'm Flavia Ryden. I sit in Salt Lake City. I oversee our practice for tech relationship management for SVB. So we support people from inception of idea all the way up to IPO. So we offer several products like most traditional banks, but what you probably know us for is our venture debt practice. So if you have any questions, just feel free to add me on LinkedIn. And I think Bree is going to share some contact info. Happy to help in anything I can.
I absolutely will. Yeah, I'll drop everybody's contact details in the chat here shortly. Thanks, Flavia. Next, we have Alicia Thistlethwaite with Deel. Alicia, this is actually my first time meeting you, so hello. It's so nice to meet you. Where are you located?
Hi, Bree. It's nice to meet you. I'm based in Toronto, Canada.
Okay, awesome. Well, hello. Thanks for being here. And then if you could, take some time and talk a little bit about Deel, that'd be great.
Absolutely. Yeah. Thanks for having us. I'm Alicia, Senior Account Executive at Deel. And a little bit about Deel is we simplify the process of hiring and paying employees and contractors in over 150 countries. And by owning the HR infrastructure, Deel makes it easy to actually manage a global workforce, handling everything from compliance and payroll to HR and support. We help manage over 200,000 clients today, manage their global operations. So, of course, if you guys have any questions, please feel free to reach out related to global hiring in HR.
Awesome. Thanks so much, Alicia. And then lastly, we have Sam Gardner with Mayor Brown. Sam, I know you're located in Salt Lake City. It's nice to see you.
It's great to be here. Thanks for being the opportunity to be a part of this today.
Absolutely. Would you mind sharing some words on Mayor Brown for us?
Well, sure. Mayor Brown is a global law firm that has offices all over the world, but we're thrilled to have an office in Salt Lake City, which we opened a couple of years ago, and we've grown to build mostly with attorneys from the Utah area that have practiced in the emerging companies and venture capital world for many years. There's about 20 of us now in Salt Lake who work in that environment, and we have well over 100 years of combined experience of helping startups do what they need to do, or working with venture capital and other investors who like to work with startups and growing companies. So we're here to help. We understand the small company space and what they do, and love to be a part of this, and also welcome Kickstart. And I've got partners who've done a lot of work with them over the years. So great to have you here, Sydnie. Thank you.
We love Mayor Brown. Great to be here.
Thanks, Sam. Okay, cool. Well, I just want to introduce Rob Ricciardelli. Some of you on the call might know Rob. Rob is one of my colleagues here at Escalon. I'm actually in Seattle right now visiting him. So we're in different places in Seattle, but I'm going to see him a little bit later. Hi, Rob.
Hey, good to see you. Hi, everybody.
You too. Would you mind sharing just a quick spiel on Escalon, and then we can introduce Sydnie and get going?
Yeah, so I'm one of the business development reps here in Seattle. We have counterparts in every major market around the country, so we're excited to be a part of this. And we specialize in in startups and working with early stage growth companies and really taking care of their full stack on their finance side as well as their HR side. We've got an incredible group of CFOs, close to 70 of them, all different verticals, and they're a very collaborative group that work with our clients. And then we have a full accounting team from controllers all the way down to bookkeeping and staff accounting. And so we've now are over 5,000 clients, active clients we have in the US, and we've got a lot of room to grow. So we're really glad to be able to host this event today. With that, wanted to introduce you to Sydnie, who is with Kickstart. And Sydnie, why don't you tell us a little bit about yourself and your path and what got you into venture funding?
Absolutely. It's a pleasure to be here. Thank you all so much for having me, and great to see such a great group of sponsors as well. We've worked extensively with many folks on the call, so great to see everybody. And thank you, Escalon, for having us. So my path into venture, I always say it's less traditional. I've also found over the years that the path into venture, I think it tends to be less traditional than folks expect. So I'll share my story, which is, I have to say it. I always have to say it starts with music, interestingly, where my mother and her parents and entire family are classical violinists. And so I grew up playing violin as a young kid, started playing guitar in middle school. And to this day, music remains a big part of my life. When I entered undergrad, I kind of just assumed I would study music and get into music. And then quickly realized there was a lot that I gained from music and a lot that I was interested beyond music. Took some business classes, just absolutely loved the part of my brain that world stimulated. And so sort of slipped into venture, frankly. I got involved with a number of internships in undergrad, starting with private equity with a search fund. And then now good friend of mine, who was a part of a group called Campus Founders Fund, reached out asking if I'd be interested. And I said yes, at the time, not knowing anything about venture capital. And I jumped in, and essentially it's a student fund that manages and invests exclusively in student companies, student-founded companies. And so it was a phenomenal experience for me as an undergrad. It's very autonomous, really got my hands dirty, if you will, with the world of venture. Just was hooked instantly. I just had so much fun with that and learned a ton. And as it turns out, that was Kickstart's fund. And so I got to know Kickstart through that experience. And I guess I should mention briefly too, I was raised East Coast, came out to Utah for the mountains, got plugged into this community. After undergrad, wound up working in consulting for a fairly short stint. It was very much my time in consulting was focused on change and transformation management, kind of in the M&A segment. And then Kickstart had a full-time opportunity open up and asked if I'd join, and the rest is history.
That's great. I can see the keyboard in the background there.
Yep.
And I guess some of us are going to get a glimpse of seeing some of your music at the end of the month. Can you tell us a little bit about that?
Oh, you bet. So as folks know, Silicon Slopes is coming up, and a number of folks on this call are heavily involved with hosting the annual Founders and Funders event. And Bree's waving at us here. And they asked me, just since so I'm fortunate enough to perform periodically, even to this day. It's sadly, I very rarely actually pick up my guitar at home. And so the only way for me to stick with it is to play publicly at restaurants and whatnot, which is such a blast. And I've met some incredible people through that over the years. And so one of the venues I play at is downtown Salt Lake, called Lake Effect, where this Founders and Funders event is hosted every year. So everybody on the call, keep this event on your radar. On the 27th, they asked if I'd perform, and I said yes. And then got to thinking, I often meet folks in the VC world who are also musicians. And so I reached out to a few folks. We're still finalizing what this is going to look like. But I'm putting together a VC band, which Rob says we need to call, what is it? Fabulous Funders.
It's fun. Yeah.
So band name TBD, but that's, I think, a definite contender. And so there will be funds represented across, or musicians representing various funds in the Utah ecosystem. I think it's going to be a blast. So stay tuned for that. And I'll also drop a link. I don't know if Bree wants to, but don't want to spend too much time talking about the music piece, but it's kind of incredible the way that the worlds can collide. And one of our portfolio companies, for anybody who may be a musician on the call as well, is called Moises, worth checking out. And this company, long story short, is in the AI space, enabling musicians to separate stems in a song and more quickly learn songs that they're working on. And so that's the very high level, but they asked me to write a song for the platform as an independent artist. And I wrote this song with founders in mind and released it almost a year ago today. So feel free to check that out. It's called Move by Sydnie Keddington on all the main platforms, but just excited to share this part of my life and alongside fellow VCs in a few weeks. It'll be a blast. So keep an eye out.
Well, thank you for that. I was thinking, you got the excitement of the startup eco world and then funding. And when you decided to go that direction, why Kickstart? What caused you to choose Kickstart? And then give us a little overview of Kickstart, of the Kickstart Fund.
Yes. Yep. Love this question. So like I mentioned, I had the opportunity to get to know this team during my time on the student fund, Campus Founders Fund. And I was so impressed with the firm and the portfolio, very, very high caliber group. Ultimately, there was just a pretty immediate culture fit. Very impressive backgrounds of this group, high caliber, like I said, that I knew I'd feel challenged by in all the right ways, but also fundamentally good people. I felt a ton of value alignment early on, and you'll see on our landing page that we quote, pride ourselves in being low ego, high conviction partners who improve the odds of success at every stage of the journey. And, there's so much efficiency that's gained when operating under a collaborative and trust-based mentality. And that's certainly the case with Kickstart. It's impressed me since day one. So I'm just a huge fan of the vibrant community we've built around the Kickstart brand over the years and the incredible ecosystem we have the privilege of being a part of here in Utah and in the Rocky Mountains. And I also love the mountains. So the mountain region focus is a definite plus for me.
That's great. On the fund, on Kickstart, what goes into the due diligence or decision-making process? And usually how long does that process take and key steps for that?
Yeah, I'll touch on that. And I realized I should also give you the overview of Kickstart. I glazed over that. So I'll just to contextualize our diligence process, I'll start with kind of who we are as a fund. So we're a pre-seed seed stage fund. We are currently operating out of our sixth fund, which is a $175 million fund. And our average check size is about $1.5 million, depending on stage. We're, as mentioned, focused on the Mountain West region. So really our thesis as a fund is one geographic thesis, and that's been the case since inception. There's just a really incredible ecosystem in this region that we feel increasingly bullish on, and really just there's a lot happening here. It's grown immensely since our founding, which, by the way, we founded in 2008 by Gavin Christensen, our managing partner. And at the time, there was this gap between angel funding and Series A funding. And so we stepped in as one of the first seed funds, really anywhere, but certainly in this region, and remain the most active seed stage group in this state to date. We, as far as industry goes, we're industry agnostic. So when you look across our portfolio, you'll see companies spanning quite a wide array of industries. Enterprise software today is probably our largest category in terms of deal count. We tend to lead the rounds that we invest in. We often, more often than not, we'll take a board seat. In particular, at the seed stage, we'll take a board seat. And then maybe I would just share quickly how we differentiate. I know that's something that we were interested in discussing here, which is, I think really a valuable, initiative that we've run over the years is what we call our collective platform, which is our effort to really build community within our portfolio, getting founders connected. The founder journey is a lonely journey. Oftentimes it's exciting, it's beautiful, it's incredible, but lonely. And so something that we feel is very important, in addition to our deep and heavy involvement with our companies and supporting our companies, is just getting folks connected with other individuals across all stages of growth. So we've got companies from the seed stage all the way through growth stage. And so, and we've got about 150 companies in the portfolio. And so really just over the years have created, again, like I said, this vibrant community that we really, we host annual events. We get fairly involved in talent recruitment. fundraising, syndicating deals, supporting companies through subsequent raises. We offer deals through third-party vendors that we have relationships with through our platform. And so there's more we could say there, but that's at a high level, I think, something that founders tend to appreciate. And we also have a podcast called Perfect Pitch, which is worth checking out, which is typically just a member of our team interviewing one of our founders and sharing stories, on the battleground and the highs and the lows that it is, that is the founder journey. So that's a bit of a ramble. I know you asked about diligence process, so I can go into that now. So our decision-making process, typically the way this is run, and it varies a bit deal by deal, but we'll typically have an initial meeting with somebody on our team, one or two folks from our team, to gauge fit. And if we have a pre-existing relationship with the founder, sometimes it's going to look a little bit different, but usually you can expect to have a first meeting, and then we'll discuss that meeting in our weekly partner meeting, which tends to take place on Mondays. And in that meeting, we'll discuss deals we saw in the prior week and make a decision on which of those deals we're interested in considering running a more formal diligence process for. And so what that looks like is if we want to learn a little more, we'll take it to the broader team. And from there, make a yes or no decision on proceeding with diligence. And then from a timing perspective, there's a number of variables that can affect the total timeline. We've moved as quickly as 1 week for particular deals. I'd say that's kind of an exception. Generally, I'd say about a month is what we tend to see. Sometimes a little bit longer if there's changes being made in Delaware C conversion, for instance, or legal issues that need to be resolved ahead of investment, or what have you. But typically speaking, we just love to we work with the founders that we're investing in on the timeline that they're working with. And we'll do, we'll look at every aspect of the business, run reference calls, and to speak with customers or prospective customers. Love to get to know the teams, obviously, that we're investing in. That's a big part of it. And so we try to meet in person when we can. It doesn't always happen, but that tends to make a great difference in the diligence process. Does that answer the question, Rob?
Perfect. Thank you for that. With Kickstart, is there an area you can speak to that where Kickstart offers a unique or disproportionate value?
Yeah, I would say, I guess I touched on it a bit already, but just the collective platform is one of the key areas I would hit on, in terms of, I would say two main things. I think that our community initiative and the platform we've developed, we have 3 full-time members dedicated to running that platform. And so I already shared a lot about that, but that's something that we're really proud of and that our founders tend to appreciate. And then again, just going back to the culture piece, I mean, we're very patient capital partners. When we invest, we're in it for the good times and for the hard times. We know that the hard times will come if they haven't already. That's just part of the journey. And so that's something that we take very seriously, is never getting too high in the good moments and never getting too low in the low moments. It's just, you got to keep a steady head as an investor. And I think that's one of the most important roles that we play from a relationship perspective as we develop the relationship with the companies that we back and continue as thought partners throughout the journey.
Yeah, leveling out the roller coaster experience, right? Do you have an equity ownership minimum over there at Kickstart?
Roughly about 10% is what we tend to target.
Okay, that's good to know. And how do your companies usually typically go raise their next round? How do you help them?
Yeah, over the years, obviously we've got a rich array of relationships through our network that we leverage for subsequent rounds. And so it's just an incredible ecosystem here locally that we're constantly collaborating on deals with, and circulating deals through. Like I say, we're actively involved in the companies. And so I would say the biggest thing really is teeing the company up for success. And I think this looks like this manifests itself in a few ways. One being the first round. I think maybe we'll get to this a bit later, but I think founders can at times, especially first-time founders, underappreciate the importance of what that first round looks like from a number of angles, including what does the syndicate look like? What do the terms look like? Is this quote unquote a normal company? And the reason that matters so much is down the road for subsequent rounds, are there aspects of deal and company formation that will need to be resolved, which just creates friction. And in a world where there's so many deals for investors to choose from, we always want to ensure that things are looking clean and kind of consistent from day one. And so ensuring the first round is set up for success, and then governance, having regular board meetings, a healthy level of communication with the founders, and just being really getting ahead of key milestones that those companies will need to hit ahead of that inflection point in the next fundraise. Those are conversations we're having regularly with our companies.
That's good to know. And then is there on occasion, or do you have a policy in place for when you're investing in competing companies?
Good question. We have a pretty strict non-compete, or we have a pretty strict policy around not investing in competing companies. We really value we want to make sure that there's not conflict of interest. And so anytime we're stepping into that realm, we tend to shy away from investing in competing companies.
I think it might be tough in today's industry. So many different platforms coming out there. Do you run into that a lot in those occasions? Do you have occasions where you run into that a lot?
Yeah, it's a good point. I mean, it's any company today is going to in day one is going to at exit likely look quite different from what it looked like at inception. And we're coming in at that earliest stage. We're first money in, or first institutional money in. And so it happens. I would honestly, it's pretty rare that it becomes an issue. I can't think of an example where it's become an issue. And like I say, I think we think ahead on that of not only is it competitive today, but could it be down the road based on what the roadmap is looking like. And so again, just with respect to the founders we've already backed, it's something that we take pretty seriously, but it's a good point. I mean, companies evolve and pivot over time. And so it's always something to keep an eye on, but so far we've been good on that front.
Well, that's great. And then what kind of a pace do you guys have? Describe your investment pace?
Yeah, pacing is important for every fund. For instance, out of this particular fund, we'll do about 50 deals out of this fund. We closed this fund a little over a year ago, so still very much active out of Fund 6. We tend to do a larger quantity of pre-seed deals initially, reason being, as those opportunities mature, we will invest follow-on capital into sort of the premier deals out of that pool of investments in our portfolio. We formally reserve capital for our seed stage deals, and then we have a pool of pile-on capital that we'll dedicate to those pre-seed deals. And so over time, you'll see, we tend to do more checks early on, but smaller checks, and then it'll even out. But overall, it's about an even split between pre-seed and seed checks throughout the course of the fund. And we'll deploy over about a 3-year period, which is fairly standard for funds like ours. And like I say, we're about a year into this current fund.
Great.
Hey, I'm just going to field a couple of questions that we've got in the chat. I think it's James Benson who asked this. Does Kickstart participate in safe offerings?
Oh, good question. We have, and we do. I would say we're seeing more notes these days. And really, in particular, we're seeing more and more price rounds these days, but it's something that we certainly have been involved with and are open to.
Okay. And then can you touch base, James, let me know if you have any other follow-up questions to that. Sydnie, I know that you kind of already mentioned your geographical kind of focus, but can you touch on that a little bit more? We've got a few questions coming in about that.
Yeah, you bet. More so just as to what that looks like, where, yeah.
Like if there's any wiggle room, are you guys being flexible? Is it really, do you call it Rocky Mountain region, Mountain West? Mm-hmm. What are the states that these founders need to live in? If people are kind of spread apart, if they've got, 3 founders and they're kind of spread apart the US and one of them is in, Colorado or something, is that, doable? Or
Yeah, no, thank you for specifying that. I should have been more specific on that. So when I say mountain region, it's what we look for. Primarily Utah and Colorado are our 2 largest markets. Arizona, New Mexico are 2 other core markets for us. I run point on our strategy in Arizona, New Mexico for our team. So if you're based there, please reach out. If you're, across the board, anybody on this call, feel free to reach out. And then outside of those particular states, we've seen a little more happening in Idaho, Montana, there's some interesting stuff going on up there. Next Frontier Capital is a fantastic group we work closely with, based in Bozeman. And so there's a bit of a hub building up that way. And California, we've got a few investments out of California. And then on a more of an exception basis, we've got a handful of companies scattered across the country. And those tend to be more a function of pre-existing relationships, or a company relocates or something like that. One of the reasons it's the geographic component is remains important to us is, again, just that community piece where we're able to regularly meet in person and create an environment where those companies are able to also foster relationships locally. And so that's kind of the rationale. And there's just a ton of, really great synergy and overlap between the mountain states. I guess Nevada is another state we've seen some stuff coming out of. I don't believe we've done a deal out of Nevada yet. And so if you're not in one of those 4 states, please feel free to still reach out. We're always happy to talk. And at the very least, make introductions if it's not a fit for us. But it's a good question. Thanks for clarifying.
Yeah, of course. And then you're probably going to get to this, Rob, but I do have a question from a friend of ours, Jason Bruger, who's asking what Sydney's favorite sport co is, or maybe a favorite. We don't have a favorite. This call is being recorded.
I can't call out a favorite. That's impossible. And there's so many that are doing really exciting things. What I can say is a couple that I work closely with. I'm completely biased on Moises, as I mentioned earlier, because of the music connection, and that's a deal I've been involved with for a number of years now. They're doing very well, and so it's easy to like a company in this environment that's just crushing it. So it's great to see that, and great to be a part of that. I guess I could just say the reason I like these guys, it's not only it's a function of obviously the space is something I'm excited about. The team is just super low ego, super high caliber. They move so quickly, and they're constantly threading the needle between, I think, a common challenge at the early stage with a team of this profile it's easy to get distracted by opportunities, and with a team that can iterate so quickly, something they've demonstrated in a really impressive way is their ability to stay focused and prioritize the right things. And I could go on, but I think just speaking to qualities of, businesses that get me excited, those are a few of them. There's another company in the future of work space that I'm closely involved with, called Cadence. For anybody on the call who is interested, definitely worth checking out. They're a hybrid work solution for businesses in the remote world, and they enable orchestration of teams in this environment where, to this day, so many leaders are at a loss for how to handle and manage this transition as it continues to evolve into this hybrid environment, and how to create an efficient mechanism for teams to collaborate and work when some are in office, some are not. When will they be in office? When will they not? They're doing quite well, and definitely worth exploring if it could be interesting for your business. Shameless plug. And then the CEO, Dan Bladen, is a real thought leader in this space. Those are a couple, and it's not to honestly just kind of calling out qualities of the companies more than anything. There's so many more I could list, and so definitely no favorites in the world of venture, but 2 that I happen to be close with that I'm quite excited about.
Love that. And then I just dropped Cadence in the chat there. And then other question, just because I know some people are gonna stick around to the end and some might not. What is the best way to contact you if a founder wants to reach out?
There's two ways. One, we have a pitch form on our website.
I'll drop that.
Go to kickstartfund.com. Yeah, feel free. So feel free to fill out that pitch form, and somebody on our team will reach out if it seems like it could be a fit. And then feel free to email me directly if you'd like to connect. It's just Sydnie@kickstartfund.com. I can throw that in the chat if it's helpful, because my name is spelled just weird enough that people get it wrong. But there it is right there. And you can find information on our firm throughout our website. So definitely check it out. I'm dropping that as well.
Thank you. And then back to Rob. Sorry to hop in there.
Great. Glad you asked those questions.
Questions, great response as well. And I think this is probably going to be a favorite question of a lot of folks on the call here is, what's your view of the current state of the market? What are you are seeing as a trend? And how are you advising your companies during this, the market conditions we're seeing today?
Yeah, it's an interesting market we're in for sure. I know I'm as I'm starting to speak, I'm realizing Flavia would have really interesting perspective on this too. So feel free to chime in. I think the main thing that we're advising companies around is obviously contraction in the market. It's not what it was in 2021. It's a healthy reset. There's no doubt about that. There's a lot happening right now that's kind of painful in the moment, but needing to happen for the longer term health of the space. There's a lot of opportunity. There's great talent for good or for worse is freeing up with some of the layoffs we're seeing. And through that, there's new businesses being formed that we're really excited about. And so, I think that tends to be the trend in environments that we're in, the type of environment that we're in right now. A lot of growing pains through it, but a lot of opportunity. No longer is the guidance growth at all costs. It's definitely pushing toward default alive, efficient growth, optimizing for runway, healthy fundamentals. That's what we're talking about with our companies. I don't know if you'd add anything, Flavia. I just know you've got great perspective on this as well.
Yeah, I would echo everything you have to say. I think the companies that are really set up for success going into 2024 are those who are thinking about how can I continue to grow, right-sizing the team, making sure that I'm not cutting off like muscle from this business, but excess fat that I might just not need, right? So I know a lot of teams really ramped up hiring during 2021, just given the demand of the market. Now that the market has shifted, the best operators are shifting with those, or like being proactive about it. And I would say a lot of companies are now talking about profitability, which is good. Owning your own destiny is great.
Yeah, well said.
That's great. Shameless plug for Escalon. A lot of companies are realizing value by outsourcing and not having to hire in those areas where they don't need to hire. So I'll may mention that as well. So that's great perspective on the conditions, which leads me into the next question of fundraising. Talking about the differences between what you look for between a pre-seed and a seed fundraise.
Yeah, it's a great question. And the answer somewhat is it depends on a number of factors. We look at, do we have a relationship with the founder? What's the track record of this founder? Do we have high conviction around this space? What I think probably honestly the most important question really is what needs to be raised. I guess this could be debated, but like one of the most important questions is what needs to be raised to hit key milestones. And so we'll be looking at just more than anything, kind of what does the fundraise look like? What's the fundraise requirement? And to some extent, what's our check size looking like? And what stage is the company based on the dynamics of this round? And I would just say in conjunction with that, and the reason I bring up that last question is capital efficiency. Today, just as much as ever, probably more than ever, is something that's important, I think, to most investors. Really seeing that this founding team has demonstrated an ability to proceed to operate with a capital efficient mindset, making good decisions. And a reality of operating a company is constraint tends to foster creativity, and it's easier said than done to make good business decisions when you've got a ton of money in the bank that you don't really need for what you're doing today. You'll hear a lot of stories from founders who have been on both sides of the table on that front. And so I just think seeing that there's a real justification for why is this much money required at present, what's been raised to date, to get the company to where it is, or what hasn't been raised to date. And so kind of a nuanced answer, but hopefully that provides some clarity.
Oh, that's great. When you're looking at a potential new investment opportunity, why is it so vital for you, or would it be vital for you to meet with them in person?
Yeah, I mean, COVID taught us a lot about this when that wasn't possible for so long. And I think that we learned that you can't really beat in person. You learn a lot about the relationship and the dynamic in a person when you're face to face. And so it's something that's definitely important from my perspective, and something that I always try to do. there's going to be moments where the deal's moving too quickly and we feel that we know what we need to know, and it might not happen 100% of the time. But generally, as part of our process, something we aim to do is slot in, I guess I didn't mention this earlier, but slot in some kind of a less formal activity where whether it's grabbing lunch or golfing or skiing or what have you with the founder, just to get to know folks on it, just to kind of humanize the process, make it less transactional, and recognizing, hey, this is a real long-term relationship we're building. Let's get that started off on just on a positive footing, and really getting to know each other beyond the screen of Zoom and the pitch deck. Let's get to know who these people are as people.
Yeah, it's great to see eyeballs when you're having those, you're talking about a future, of an individual or individuals and their mission and their passion. It's always good to get in front of them. So that's a great response.
Yeah.
What are some of the mistakes you've seen founders make when it comes to fundraising?
Yeah, one of the first things that comes to mind for me with this is assuming that venture is the right path. Honestly, there's a lot of great companies out there that shouldn't pursue venture funding, to be really honest. And so that's like one of the first things I tend to say is VC money is expensive capital. It's when it's what you need, it's definitely the right path, and finding the right venture partner is key. But I think first and foremost, if you're raising for the first time, if you're starting a company for the first time, really understand what raising venture dollars means for you, and understand what the trade-offs are, and understand that the VCs by definition, from an economic perspective, require a certain level and profile of growth. That if you're aligned with that as a founder, definitely take that path. But if you're looking to build a profitable, kind of stable lifestyle business that's going to create great economics for you and for your family and your employees, there's so many ways to go about that without pursuing VC dollars. So I don't mean to harp too heavily on that, but I think it's just it's a common misconception. Point being, it's the right path for some, certainly, and for many it turns out not to be. So just understanding and doing your homework. The other thing I'd say is formation of the company, and in particular the cap table, and being careful with who you're giving equity to early on. Once that equity is distributed, it's really hard to take that back. And so really being thoughtful around what ownership is looking like from the beginning, as that can just be, again, I think I kind of mentioned this earlier, there's already enough friction that's involved in the process. And so the last thing you want is to have a fundable business that just has a messy cap table and is, that makes the deal a non-starter for a group that otherwise could be a great fit. So that's just something to be really aware of. Other things that come to my mind, not simplifying the pitch. That's, I think, a mistake that can be made when you're in the thick of it and you're in the weeds of the business that you're building. Everything there is to know. I think it can be really challenging to zoom out and think through, okay, what are the 2 to 3 things I need this group to walk away with from this conversation. And I think that's really the key from my perspective, at least, is in terms of forming the pitch, and messaging the pitch, just keeping it simple, keeping it digestible, keeping the attention of the audience that you're presenting to. What else would I say? Not doing homework on the VC. Make sure you know who you're partnering with, and have, again, developed a real relationship with these people, understand how they work, talk with other portfolio companies, do your research and your diligence on the fund to understand how they operate and who they are. And just being relationship oriented, because at the end of the day, that's what this is. This is very much, there's a deal to be made, but there's even more importantly, in terms of the longer term viability of the business and the partnerships that you're surrounding yourself with, it's relationships are everything, and strong kind of trust-based relationships are key.
That's great. Well, the great response, great insight. With that, I'm going to go back to Brianne. She's got some more questions from the audience.
Yeah, so thanks, Rob. Firstly, Sydnie, I just want to thank you for, I think this is really, really good insight. I don't want to spend too much time on this, but do you have an example of, you mentioned VC funding is not for everyone. And I think a lot of founders are like, okay, I've got this idea, I'm going to work on this, or now I've got this product, now I'm going to go get VC funding. That's the next step. Like you said, that's really not the best for everyone. Do you have a quick example or two of maybe some you know, some criteria around like blanket statement, this is probably not going to work for VC, or even maybe some different ones where maybe you come across a founder who it might look from the outside VC is a good fit, but then once you kind of got under the hood, you know, you recognize maybe this isn't the best fit for you guys.
Yeah, I might popcorn Flavia on this one a bit too. She may have some examples. I keep putting you on the spot, but one example that comes to my mind, there have been a couple I've seen that are really strong, have really strong fundamentals, that maybe this is not to like isolate any particular group, because there's companies in both of these categories that are VC backable, but like some companies that are maybe pursuing more kind of government oriented contracts, or sometimes in the healthcare, life sciences space. Again, we have businesses in our portfolio that are in these segments, but in certain instances, government grants, they're not easy to get, but they're non-dilutive. And sometimes that's a great path. You take some work and some legwork up front, but I've seen some founders be wildly successful in securing that type of funding. And this is kind of cliche, and I hesitate to even say it, but like I've seen some companies in the consumer space in particular do incredibly well with the crowdfunding platforms. I've seen some consumer product companies in particular fund themselves almost entirely on crowdfunding. And so if you can nail that, and if you're really a brand play and you're able to nail that strategy, that can be a great way to go about it. There's SBA loans, you know, there's a number of different programs that are available and worth exploring. And I think you can, you know, as you learn kind of the world of venture, if you're new to this environment, there's a lot of great resources that you can leverage to kind of answer this question for yourself early on. And there's some great podcasts out there. I can maybe include some in the chat in a minute here, but one book I always recommend folks read is called Venture Deals, which was written by a group called Foundry out of Denver, Brad Feld and Jason Mendelson. And it's a great book that's really geared toward founders from the perspective of the VC to create parity in the fundraising process, so that while VCs exist and live in this is what we live and breathe every day, a founder coming into this for the first time is going to have, you know, we want there to be parity in that conversation as VCs, so that we can have efficient conversations early on. And so that's a book worth checking out on just the fundamentals of raising VC dollars, and can answer some of these questions too.
Okay. And then Sydnie, I think maybe you and I will spend a little bit of time after this call with Rob and kind of compile a bunch of notes, and we'll send, you know, an email out to all of you guys with kind of the high points that she's talked about, and include links, you know, the books and the port codes that she's talked about and all that kind of stuff. So take notes, but we'll send you some as well. And then Rob, yeah, maybe just keep going for another 5 minutes, and then we can tackle the rest of these questions after. But Sydnie, I did just have one more for you. I think that it's very common for VCs to have different opinions. I think a lot of founders, you know, that I've talked to can get frustrated, obviously, with kind of getting different opinions from all of them, and kind of shopping around, and then, you know, they don't know when it's time to pull the plug on, for example, if multiple VCs are like, hey, I don't think that VC funding is the route for you. What's your advice to those founders? I mean, because I think it has happened sometimes where people are told that's not the case, that they shouldn't be getting VC funding, but then they go, you know, and they strike gold with one VC, and it's a really good fit, and then they get it. So like, what's your advice to founders who are just kind of still plugging away at looking for funding via VCs?
You know, it's definitely a fine line. I mean, I think the reality is this might not be like I would say more often than not, if the VC's perspective is that VC funding might not be the fit for you, like you're not necessarily going to hear that directly from the VC. So that's like the first thing, is like, you're more likely, for good or for worse, to hear it's not a fit with our group. And so what I would say is, like, if you're, and I think that's a challenge for founders raising capital, and frankly, particularly in this environment where you're going to hear a lot of no's before you hear a yes. And the other reality is securing your lead investor that's the key kind of first step. And the fact of the matter is, once you have your lead investor, the rest of the syndicate tends to fall into place in a much more straightforward fashion than prior to that moment. And so what I would say is tenacity is key. Like if you feel conviction that this is the route you want to take and that the growth expectation of the VC is something you're in alignment with, and also what you want for your business, and you've made that assertion, then go. I think that what's really important is taking feedback seriously, understanding what is the hang up, asking that question at the end of a call, like just asking folks to share with you, what could make this more interesting, with the caveat of that, like VCs are having a lot of these conversations. It's hard to get attention. It's certainly something that I try to spend time talking through with founders. And at the same time, we meet with a lot of companies. And so I think building real relationships with VCs where you can dig in a little deeper and have those conversations in a candid way is just, that's never going to hurt you. And I don't know if I'm going off the path of what you had asked, but I would just say, I think that that's really the way to think about it, is if you're being told, hey, VC isn't the right route for you, that's probably something you should consider depending on who it's coming from. But if you feel conviction that it is, you're going to hear a lot of no's before you hear a yes. And sometimes it's a function of timing. Sometimes it's a function of where your business sits versus where it needs to sit to be interesting. So again, just, taking feedback seriously, soliciting that feedback actively, and finding the right fit.
Okay. And do you think, I know you've talked a lot about building a relationship with VCs, but you can ask these questions. How do you suppose founders can do that, outside of just actively trying to pitch to them? Do you, find them at certain events, or like, what are some other ways that they can stay active with VCs?
One thing I'd say is be thoughtful about who you're talking with from the firm. The reality is, if you're trying to build a relationship right out the gate with, speaking for Kickstart, like we're a reasonably non-hierarchical firm, but at the same time, like our partners have just a different profile of bandwidth for conversations like this, whereas non-partners on our team this is kind of more of what we do. And so that's thing one, is just be thoughtful and mindful of who you're speaking with and who you're building a relationship with. And sorry, Brie, can you repeat the question? You asked, how do you go about
building, you said building a relationship with VCs.
And where to find.
You can feel comfortable and have those more meaningful conversations. Like, I would assume going to events that VCs are at, probably like engaging with them on LinkedIn. Are there any other ways that you think of that they can kind of begin building those relationships even before they're fundraising, right? So that they can have those relationships.
Yeah, I think events can be a great way to do it, and just teeing off those conversations. I honestly, I think if you are able to, I'm spitballing a little bit, but I always appreciate founders who just send me updates on a regular basis of kind of what's going on with their business, keeping me up to date on how things are going. I do my best to take the time to read those. And just having regular catch-ups, even if it's like a 15-minute Zoom call, just to hey, here's where we're at. I have this particular question, and just honestly being mindful of the time, because it can be a tricky balance, because you want to just being mindful of time. But I think even if it's a 15-minute catch-up here and there of here's where we're at, here's a challenge that I'm facing, what are your thoughts, etc. So hopefully that's helpful. That's how I tend to think about it. And I think it can be a valuable approach.
I think so. Yeah. And I think it differs, like you said, VC to VC, right? It's going to depend on the person. It's going to depend on the firm. But I think this is all really, really good stuff that people can try. So I really appreciate that. I'm really sorry, Rob, I didn't mean to go off the rails there, but I am just going to jump into these other questions that the audience had asked. So one question is, can you please speak to we have 4 right now, just so you know, time-wise. Speak to the minimum requisites for considerations.
I think from an investment perspective, this is a nuanced one, I'll say, because it just depends on so much in terms of the business model, the space that the company's in, how are they generating revenue. So sometimes we're more interested in, for instance, let's say it's a creator tool, maybe we're more interested in user growth first and foremost, and then revenue will follow. Let's say it's a company in the life sciences space, and maybe they need FDA approval, and that's not a space, so that's obviously going to be a longer path to revenue. So it kind of depends. I tend to say at a really high level, it's nice to see some level of product market fit, call it 30, 40K MRR, starts to get us kind of excited or interested. And that at the pre-seed stage, and then something more in the range of a few $100K in MRRs, starts to get really interesting, for somewhat later. So it depends on how, it just depends. That's always a conversation I'm happy to have offline with the company. So I'll leave it at that for now.
Cool. And then, I know you kind of have already touched on this, so maybe just quickly, what Rod asked, what space excites you and what trends do you not entertain, if any?
Different members of our team could answer this differently based on where we're kind of specializing a bit. We don't specialize a ton on our team, but a bit. I would say for me personally, we're seeing a lot in AI. I'm honestly I'm not going to spend a lot of time talking about that today, just because there's too much to unpack there. But there's some really interesting trends on that front. I have been just interested in the future of workspace. I think since that's become such an interesting and important topic, and one that I've been involved with through the company Cadence, like I mentioned. Personally, I'm biased. I think there's a lot to be excited about in the music space, and in the creator economy. That's something that I personally have spent a lot of time in. I'm always interested personally in disruptive healthcare solutions. It's a tough space, and there's a lot out there, but those are a few just quickly that I'd rattle off.
Okay. I've got one for you. I'm going to send her over to you after this call on the healthcare solutions.
Cool.
Okay, and then we have another one. Sorry if I missed it, but what is the average pre-seed investment Kickstart makes?
Check size for pre-seed tends to be around 500K, as early as like 250 on the really early end, and call it anything under $1 million, or under 700K rather, for a pre-seed.
Okay, and then how do VCs and also you specifically feel about working with investment bankers?
Oh, well, we in the context of, was that the question?
Tim, what would the context of your question be?
Yeah, we certainly work with investment bankers. It just depends on the profile of the deal and where the company's heading. But it's definitely something that if I'm interpreting the question correctly, we've got a lot of those relationships.
Yeah, Tim, if you want to, he's got clients who are, he's an investment banker and he's got clients who are,
okay.
I think that she would.
Let's talk.
Yeah, reach out to her. Tim, I'll drop her email again in the chat. Guys, we've got 7 more minutes. Oh, does Kickstart invest via SAFE, which we kind of already went over, but do you want to touch on that again, Sydnie?
Oh yeah, I think we touched on that, and we're open to it.
And guys, we've got 6 minutes left, so Rob can ask some questions. But if you guys have questions for Sydnie, now's the time. We really want this to be interactive. Really happy that Sydnie's on here with us. She has a lot of really great experience. She's a really good person, and she's very open to kind of talking about specific situations or experiences that she's had too. So
yeah, I've got another question, Brianne, before we move on.
Sure.
I wanted to touch on after a company is invested, because it's a big question for VCs, what they do with companies after the investment, how you support them, how often you speak with them and get together with them. What do you bring to them post investment?
Absolutely. Like I mentioned, for seed deals, we typically take a board seat. And so the cadence of those board meetings is, it varies depending on the company and their preference, but you'll see that sometimes for an earlier stage company, maybe as frequently as monthly, usually bi-monthly or quarterly is what we tend to see, with regular investor updates in between. And we tend to aim to have conversations between those meetings, whether we have a board seat or not. I'm connecting with founders that with companies that I'm running point on. I would say typically on at least a bi-monthly basis. So trying to have a pretty regular communication thread with folks that we have invested in terms of communication cadence. And in terms of post-investment, the way that we support our companies, of course, again, as board members, there's a lot there, obviously. I think I hit on earlier, talent and recruitment is something we take pretty seriously and spend a lot of time on, both through our existing we really leverage our existing network, our own portfolio, and the ecosystem more broadly. We have a member of our team, several members of our team, and Karen Zelnick in particular, who runs point on this for us and does a phenomenal job. We have a great track record for pairing companies with great, especially executive level talent at the C-suite. So that's something we spend a lot of time on, and we're having regular conversations on like a weekly basis within our team of who needs talent and where can we source that. And then, like I said earlier, I think as well as fundraising, teeing the company up for success for future raises, having regular conversations about what that fundraise, should be looking like, and where we sit as a company, and what our positioning is between now and then, and just getting folks plugged into the community and ecosystem is like I said earlier, a pretty important part of it too.
That's great. I don't know where our time is. I've got one other question. Brianne, do you have another question?
No, not, we don't right now.
Okay, great. I'm sure you love to hit on every investment you've made, and there's never any failures. But if you do happen to have a failed investment, how do you handle those situations?
Yeah, those are tough moments, because the reality of this world is if you're familiar with the power law, there's going to be failed investments. That's the game that we are in, and we know that. That's why I say earlier, we're patient investors. We obviously at the point of investment, we have to see potential for the company reaching $1 billion outcome. We have to see that as a possibility. And we recognize when we make the investment that very few companies will get to that point. And that's kind of the model is the companies that do get to that point or close to it make up for the companies that don't. And so, as you've kind of heard me emphasize throughout the call, relationships are everything in this business. We've invested in founders that have a failed company, and we've reinvested in those same companies at their second or third at bat and seen great success. And so I would say when those moments come, it's never easy. It sucks. It's hard. It's speaking for myself, there's kind of this period of denial where you've put so much energy into the business, and we only experience a fraction of what that's like relative to the founder, who this is their baby. They've put everything into this and sacrificed so much. And so really being a sounding board and being just human in those moments, honestly, I mean, that's critical. I think it just keeping kind of the eye on the broader target of like what the VC game is about as an investor, so that in those moments, the conversations with the founders is centered around, what is the best path forward? What hard decisions do we need to make, or can we make right now to get this company to a position where it deserves to, where we're able to fight to live another day, or see another day. And that's I would say just another really key component is being able to have those hard conversations and have a transparent dynamic that allows for those uncomfortable conversations in the moment, that then tease the company up for avoiding a total shutdown if possible, where maybe there's a different outcome, even if it's not what everybody was hoping for. So it happens, and it's something that we try to keep a really level head around.
Perfect. Great. I think we're up on time. Brianne, I think you're going to send her LinkedIn message link to everyone. Somehow it just came to me.
Oh, yeah. Uh-oh. I sent you another one directly to you. Yeah, thanks so much, Sydnie. Thanks everyone for being on the call. I'm going to go ahead and drop everyone's details in the chat.
Thank you all so much for having me. Thanks. Great to see everybody on this call, and appreciate being involved.
Yeah. Thanks, guys.
And then we'll let everybody kind of file out. And then if you guys would stay on, I'd love to do a little debrief with you.
You got it.
And I don't know how that works, so I'm just gonna, the numbers are going down. Thanks, John. Thanks, James.
Do you want us to hop into a different link maybe, I wonder?
Yes, I will send you guys, I'll send you all a new link right now.
Okay.
Sounds good. Okay, see you there. Thanks, everybody.